Are you ready to rock and roll?
Yeah, absolutely. Let's do it.
Yeah. All right, cool. So listen, Alex Bell is on the line this evening. Alex, thank you very much for joining us. And I know we got a lot that we're going to cover this evening. And for anybody that's on the call who doesn't know who Alex Bell is, he is a commercial insurance broker for MyCor, and he focuses on residential real estate. And I would say a large percentage of his practice is focused exclusively on working with real estate developers and also investors. One of the things that I like about Alex Bell is that he has access to, I would say, some of the best in-class solutions, products that I've seen, and that really kind of, comes down to the contacts that he's made over the years. He's been able to negotiate great rates, terms for real estate investors and property management groups as well. So tonight, my good friend Alex Bell, really what I want to do is sit down and have a nice conversation with you, talk to you about, what you're seeing in the markets, how your clients have been impacted. And so that when people leave the call this evening, they're going to feel they left with something useful and some information that they can actually use going forward. So that makes sense. And so it's just a conversation. And listen, for anybody on the line as well, too, if you guys have any questions, go ahead. You can just unmute yourselves. Fire away, or if you don't feel comfortable unmuting yourselves, there's a chat box that you can always ask questions. So Alex, are you ready to rock and roll, my friend?
Yeah, let's do it. So first of all, it's nice to be with you guys. It really is uncharted territories, right? I've had several conversations, and the crazy thing is with respect to your insurance program, insurance is all about transfer of risk, right? When you look at a property, you are taking on various kinds of risks, financial, different things like that. And the conversations I've had with a lot of people over the last 4 to 5 weeks, Gary, is everyone is familiar with the pro forma, right? Every single investor knows how to fill in. Now, when you're looking at calculating or factoring in risk, right? And generally it's vacancy, right? A lot of people use 3% or whatever. Myself included, I would never, ever, ever have anticipated or had a tab to assess this kind of risk, right? It's brand new to everyone. And I'll talk a bit more about the past with SARS and how the industry has changed and shifted with respect to COVID-19, but it really is uncharted territory. And I've had many conversations. Investors are worried. They're worried about their tenants not being able to pay their rent and whatnot. So it really is uncharted territory.
For sure. So here's my first question that I have. Is a global pandemic included or excluded in your insurance? And I think I know the answer, but I'm going to throw it out there anyways.
Yeah. So obviously I've had many conversations with respect to this. And the short answer is no. And I'm going to take you through the history of this and why it is that way. The one thing before I drill down on that, Gary, is the takeaway from this conversation is I want investors, whether they work with me or not, it doesn't matter. That's not what this is about. You need to be cross-referencing or double-checking your current insurance policy and looking for these coverages. But so the first thing is to dovetail on that. Your insurance policy should have what's called a broad form wording, right? Which includes 25 to 30 perils, all right? Not a named perils wording, which is about 8 to 12, but broad form. An example of an insurance peril, Gary, is flood, sewer backup, tenant vandalism, wind, fire, lightning, things like that, right? And here's the sad reality, as most people know, like I'm a broker. I don't work for a particular insurance company. In the insurance industry, much like big pharma, banks, oil and gas, they're in this to make money. So that global pandemic was a covered peril back before the SARS pandemic. All right, that's for those of you. I definitely remember. I remember. I'm old enough to actually remember that. And what happened was the industry that as a global marketplace, they took an absolute beating on it. Right. So as insurance and banks, what they do is they learn from that and they've excluded. So a global pandemic is no longer a covered peril, and it is now an exclusion on every single policy. I've yet to, and I've been on a lot of conference calls with different insurers, reinsurance companies, And even if you wanted to pay extra or buy the coverage, it's not available. And after we get through all of this, it's not going to be available. I can guarantee you that for sure. So unfortunately, the answer is no.
Okay. Yeah. Okay. I think we kind of figured that, but you got to ask, right?
Yeah, of
Now,
course.
what about if my tenants don't pay? And now I know that one of the things that we have always told our investors is always make sure you have a buffer for at least a minimum of 3 months in your account.
Right. Right.
But let's say now, who knows how long this is going to go for? We obviously know that there's also the mortgage deferral that you can do as well too. Some people are not sure if
Mm-hmm.
they want to take it. Some people are going to take it. But what about from an insurance standpoint? Is there any
Yeah.
coverage there?
So again, and a lot of people have called. So in your insurance policy, and it doesn't matter what company you're working with, there is coverage called loss of rental income. All right. So there is coverage in there for that. In the event that if there's a covered peril, again, fire, wind, lightning, sewer backup, if your property is damaged and it's uninhabitable and your tenant can't live in there or pay rent, the insurance company would pay and against that is your gross monthly rent roll, all right, not your positive cash flow, but the gross monthly rent roll. And they would pay that. But the exclusion with global pandemic, they're not going to cover loss of rental income due to the global pandemic. Now, what's happening? So I've had, as of April 1st, and this is a real legitimate concern, right? A lot of investors, like you're talking about that cushion, the majority of the people that I work with have received the rent from their tenants as of April 1st, right? And I'm sure everyone's online. Unfortunately, there are those tenant advocacy groups out there that feel that they don't have to pay rent even if they have the money, right? Everyone's seeing the lobbying downtown and whatnot. So what's going to happen is the conversations I've had is a lot of tenants are telling their landlords, I'm not going to pay you May 1st. They don't have the money. Whether they've lost their job or not, they've just flat out drawn the line in the sand. So the conversations I've had with my insurance partners are they haven't had a moratorium or relief from paying the insurance premium. They didn't do it for the month of April. My honest opinion, Gary, is who knows how long this is going. You and I have had a couple chats over the last 2 or 3 weeks talking about this. Yeah. If this goes deep into May and definitely into June, it is my opinion. This is just an opinion. There's nothing official as of yet. The insurance industry will be providing relief, all right, from paying your insurance premiums. Again, that's kind of piggybacking on, I don't know how many investors, and I'd be curious to hear how their experience is if when you're applying for relief or a moratorium with your bank, how that actually has transitioned. So,
right.
Unfortunately, and the second piece of that, Gary, is there's information out there. A lot of the auto insurance companies have provided relief. And how they're doing that, I'll take you through that, because unfortunately, again, when they do the actuarials, okay, on investment property insurance, it's a completely different matrix than auto insurance. So a lot of clients have said, you know what, I've called my auto insurance company. They've reduced the classification or the number of miles I'm driving, and I was able to save $30, $40 a month. And from what I'm seeing, that is the standard now. A lot of insurance companies, and the ones that haven't, are going to get on board, because if they don't, they'll, the bad PR from this will negatively impact them. So that's what's happening with respect to auto insurance, but it hasn't happened with property and casualty as of yet.
Okay. So I don't know if you kind of noticed my body language. I was kind of back. And then as soon as you said that there may be some relief coming, I got pretty excited about that. So that's good to know.
Yeah. Again, nothing's definite. And I'm happy to. I mean, you guys at Smart Home Choice have done a great job with updates and your webinars and your podcasts and things like that. So as soon as I hear something, Gary, I will reach out to you and let you know, and we can provide all your members with updates.
Yeah, no, I appreciate that for sure. So I don't know if anybody on the line has any questions for Alex or Chris or Quentin. If not, I'm going to keep kind of rolling through this. But student rentals, that's something that I've heard a couple of investors kind of talk about that, where They thought that, potentially student rentals would be something that would almost be recession proof.
Yeah.
But we obviously know now that there is some impact to investors that have been, doing student rentals. Now, I'm asking, really, have you seen impact in that space, and how big of an impact have you
Yeah.
seen? Just kind of give
Yeah.
us some insight into that.
Yeah, I definitely have. So again, as most, whether the college or university, they packed up and went home. The schools have closed, and whether they're going online to continue their studies or not. But a lot of my clients who focus, and I know Smart Home Choice has done. You guys were kind of first to post up in Peterborough with that, but the student rental strategy, the students are leaving home, all right? And here's where you need to double check, read the fine print of your policy. So most insurance companies that will provide, and the appetite is very, very limited, but if your company will insure a student rental, the vacancy endorsement coverage, okay, vacancy allowance coverage is for 30 days only, all right? And please pay attention to this, because you really need to be following up with your insurance company to make sure there's not a gap here. So if your policy reads that you only have 30 days, okay, students leaving in April, some have left the end of March, and if they're not returning, if hopefully they come back in September, you're well beyond that 30-day allowance period, all right? So you're going to have to work with your insurance agent, broker, or company and see if they will grant you a free extension. Every insurance company will add on at an additional cost, and it's typically for the average property in the Durham, Peterborough area, it would be $100 to $200 per month. So it's an extra cost to add on that coverage. The insurance companies that I work with, the coverage is not 30 days, it's 120 days, all right? You get free included. So that closes the gap. And I'm in discussions with Arch Canada, who I place the majority of my business with, to get a free extension on that 120 days. Because students have went home. If they're coming back in September, you're definitely past 30 days, and you're going to surpass 120 as well. So that is very, very important. Make sure, because what will happen is if you don't follow up on it and your property is broken into or it burns down or whatever, and you haven't ratified or solidified that coverage, you have no insurance.
Right. You just touched on something there that I want to kind of expand a little bit on as well too. Obviously, and I think this makes sense for this call, is have you seen or have you heard more of homes being broken into? Because I actually had a call today with one of my investors where they were saying that they've not them particularly, but they've known of a few investors where they've actually had their homes broken into that may be in the middle of a conversion. Have you heard anything in regards to that? More claims?
That's a great question, Gary. And I've only had one client that has happened to, and that was in downtown Hamilton, and not the most desirable area. And so I've only had, so to answer your question, I've had one client, unfortunately, that has went through that.
Okay, so you haven't seen anything significant, no major spikes in regards to that. Okay,
not yet. But if I can elaborate on that, there's another, what I'm starting to see or anticipate as well, I've had a few of these, is the vandalism caused by tenants, all right? So not third-party break-ins where a stranger breaks in, but I've had a couple clients who their tenants are threatening, you know what, I'm not paying you the rent, and I know you can't kick me out, because as all investors are aware, there's a moratorium on evictions, right? So some people are starting to threaten that they're going to trash their unit. So you definitely want to make sure that you have vandalism caused by tenants coverage. That's a very important one in a time like this.
Right. Okay. No, that's a good point. You guys have any questions? Anybody on the line, just while we're kind of on the student rental piece right now, or any kind of follow-up questions in regards to my questions that I had earlier?
I do have a question.
Yeah, go ahead, Debbie.
I'm lucky enough to have a couple of international students in each of my houses, so they're not entirely vacant. I'm not getting any real income out of them, but the houses are vacant. So I guess what I'm asking is, do all of those sorts of coverages for vacancy, do they apply when there's only 1 or 2 rather than 8 students in the house, or there's somebody there, so that's good enough?
That's a great question, Demi. And what it drills down to in the policy wording is it has to be more than 50% occupied. So the number of units or rooms, if you will, divided by. So if it's less than 50, they consider that vacant. If it's greater than 50, it's considered tenanted.
Thank
That's a good
you,
question.
Alex. Thank
My
you very
pleasure.
much.
My pleasure.
That helps you, Debbie?
No.
No.
Yeah.
All right.
Yes, it does. Thank you.
Debbie,
Yes.
that's something, that's a conversation that you and I can have in confidence later on.
Sure.
I'd be more than happy to talk about your specific situation.
Sure. We can touch base maybe tomorrow or next week.
Yeah. Sounds great.
That's
So-
great. Thanks, Alex.
So
My
Alex,
pleasure.
just to come back on that same question, a lot of our guys have 2-unit properties.
Yep.
Right? One unit is tenanted, the other unit they're still looking for somebody. Right now, you're talking 50-50. So, can we assume that is acceptable?
It would be, Chris. And again, you have to look at your particular policy. So I can't speak for insurance companies. Now, I happen to know, but I don't represent those. So the answer to now the program that I have, 50%, if you have a duplex, that would be considered tenanted, and you wouldn't have to buy that coverage right away, right? It would be good for the 120, and then I'm trying to see what's going to happen beyond that. But other carriers that play in this space and other companies, you have to, and that's why I implore people to actually drill down into their actual policy to confirm that.
Okay.
Does that help?
Yeah, and I
Yeah.
guess to piggyback on that as well, Alex, I guess people that are in the middle of renovations and permit
Yeah.
delays and whatnot fall into that same category. So they got to be mindful of that clause in their policy as well.
Excellent point, Quinn. And a lot of people that are doing conversions, it depends on the township, but Windsor, all their permits, everything, all the offices are closed. There's a couple out there that I'm hearing that are, but they have a skeleton staff, right? So if you're in the middle of a conversion and you're waiting for permits, that's a real issue. That's a real concern because it's going to drag on, right? Who knows how long yet? So that conversion is, if you were planning 4 to 6, it could be 12 months, right? So you need to follow up with your carrier to make sure that you still have coverage for it.
All right. Any other questions on that?
Yeah, you know what? Just one other thing, Alex, in reference to that, because I think Quentin, you brought up an excellent point. Being that you're doing some work on the property, and maybe you're going in on a daily basis, maybe your contractor, maybe a little bit less frequent now, but he's going every couple of days or so. Do we think that could count? It's not tenanted, but somebody's going in on a daily to check it out.
Yeah, another great question. So the insurance companies consider tenanted is when you actually have a signed lease and someone living in the unit. That's their definition of tenanted. When you have contractors going on a daily basis, all right, that is not considered tenanted. But a lot of insurance companies, and I've talked about this in the past with the group, when you, depending on your carrier, if you're going to be doing that conversion, they want to know how often the property is checked on, right, or looked at. So that doesn't, to answer your question, it doesn't consist or validate tenanted, but they would be happy to know that there is someone going there. But it doesn't make the coverage in force, though.
And with that in mind, I think, Alex, that on your information request forms, they're always asking if you're going to be doing work on the property because they want to know the scope of the work.
Exactly.
The scope and all these other things as well, right?
Exactly. Yeah, and exactly. And the part of the reason they ask that is insurance companies that will do an investment property, they do not like renovations, right? They consider that a higher risk or more of a construction policy. So depending on the scope, and what I always tell people is with my program, if you're doing any type of structural or additions, that would need that the standard solution doesn't cover that. You would need what's called a builder's risk policy. But if you're converting a one-story bungalow in Oshawa and you're renovating the basement to add value and increase your cash flow, the company that I place that with will accept that. They will cover you during that renovation, right? So you have to pay particular attention to the scope, just like you said, the scope of work being completed.
Okay. Let's switch gears a little bit here, Alex. And I know this has been a fairly popular form of real estate investing over the last couple of years, which is Airbnb.
Mm-hmm.
Now, have you seen this space? I'm sure you have being impacted, and is there any kind of recourse or any kind of assistance for those type of investors?
Yeah, so the insurance for Airbnb, Gary, is really the toughest class of business out there from the property side. Okay, so if and I've had a lot of investors, clients I work with, say, you know what, I'm looking at this particular asset within my portfolio. How much does the insurance change if I change it to a short-term rental, right? And the reality, I'll just talk about the market, the insurance marketplace, and then what I'm hearing from my clients. Insurance for Airbnb is extremely tough to get. All right. Airbnb has a group offering a program with respect to the liability, right? So you can, and I always tell everyone, take that group liability through Airbnb because it's good coverage. I've read through the wording. It's comprehensive and it's cheap. It's very cheap. But Airbnb does not have a group policy with respect to the property risks, right? So they have yet to find an insurance company that wants to take that on, because we've all heard the horror stories, right, about your place getting trashed, and the way the industry looks at it, Gary, is when you have a signed 12-month lease, right? That's far less of a risk than the weekend a tenant, right, that comes in for the weekend. So with respect to I don't do a lot of Airbnb. I have access to it. And if one of my clients that I work with wants to change their strategy, I will go out to the marketplace to get it. So I'll be honest and candid. I don't really know how they're being impacted. From what I'm reading online, and even my wife and I are, before this got real serious, we're looking to go up to a cottage up in Algonquin or something, and that was soon shut down. But I mean, you tell me what I imagine the vacancy rates with Airbnb are massive, and from what I hear, they're basically giving these places away now.
Yeah, you know what? I don't know, because we haven't really dealt with a lot of it. But I mean, I have talked to a couple of investors, and I know that they do have vacancy. I know for myself as well too. I was doing more like a short-term rental for OPG workers that were at the nuclear plant there, and they've since left just because of the layoffs, right? So now I'm actually looking for more long-term tenants, just because of obviously the hefty fines now as well too, right? That comes into those short-term rentals. So
yeah, good point.
Yeah.
Alex, quick question here.
Yeah.
Airbnb, I know we kind of get the picture of what that is, I think in most people's minds, but is there a difference between Airbnb proper, let's say Airbnb, and a vacation rental? Because before Airbnb became large, you go out to the cottage and you rent a cottage, right? Not a big deal. Now with the onset of Airbnb, I don't know if that is there a difference there?
Yeah, great question, Chris. So the short answer is no. With respect to how the insurance industry underwrites or looks as this as a risk, they don't look at it any different, right? Airbnb is a brand. It is an amazing brand, but as far as the underwriter, they would look at, and you know what? Before the emergence of Airbnb, back when I used to be a State Farm agent, they had a really good cottage policy. But the second that you rented that out for any type of income, it totally changed the risk, and they would not insure it, right? So the key is you can have cottage all day long, but the second that you have you rent it out for money, whether it's a weekend, month, whatever it is, the risk change and the premiums skyrocket from there. So to answer your question, they don't look at Airbnb any different than any other, because there's a lot of short-term rental companies that have emerged, right, from that. And what I advise people to do when clients call me about it, I say, you know what, I'll be happy to go through the wording if it's not Airbnb and give you my opinion on it.
You know, I didn't even think about it, but I wonder how that industry has been impacted as well too now, right, because of this.
Yeah, exactly.
You know, it's a lot of different industries being impacted by COVID-19. It's incredible. So,
yeah.
What are your thoughts on this, Alex? You know, where do you see things going in the next couple of months? I mean, I know you don't have a crystal ball, but
No.
you know, I'm sure you've sat up and thought about this, and you've probably said, okay, best case scenario, we're going to do it. We're going to have a V, and we're going to get out of this. Or, you know, maybe you've had times where you're like, man, this is going to be a multi-year impact. What are your thoughts?
And you know, you and I, we touched base because I always like to talk to my realty clients and all the, like, basically the power team or the centers of influence that I have. And you and I spoke about this last week. In my opinion, in my humble, uninformed opinion, I'm hoping we get through, things start to look better at the end of May. But who knows? Who really knows? And I mean, the world has changed, right? Who knows what it's going to look like? But for everyone out there, I sincerely hope, again, everyone I know got their rent in April 1st, but what's going to happen May 1st is that yet remains to be seen.
Right. Yeah. That's going to be the month everybody's kind of holding their breath for, right? To see what happens there, for sure.
Right.
Do you see any major changes coming up within your industry, just with everything that's happened?
Yeah, no, I don't actually, Gary, because the industry as a whole, and again, I'll never defend or stick up for the insurance. It's an evil necessity, unfortunately. They made the shift that that reduced the risk for them with respect to something like this ever happening after SARS. So they're well positioned with respect to that. As far as any other coverages, I mean, there's different things with respect to true commercial insurance, but for insurance for real estate investors, I don't see any changes. No.
Okay. What I probably know the answer to this anyways, but I mean, I know you primarily focus on residential. Do you do any commercial, Alex, or do you have any insights into commercial insurance and what type of an impact is happening on that space? Do you see companies closing down or?
Yeah, absolutely. And the answer is, I certainly do a lot of mixed commercial insurance and also true commercial. I insured a 10-story office building downtown St. John's, New Brunswick today for a client. And as a lot of real estate investors, you know, they start off with a single family duplex, a student rental strategy, and then they gravitate or lean more towards mixed commercial, right? So I think the answer to the question, Gary, is I don't foresee any changes in commercial insurance. For all intents and purposes, my offering is a commercial wording, whether it's a straight residential risk or not. So I don't see commercial changing either.
Okay. All right, cool. You guys have any other questions? Anybody on the line?
Hey, Gary, I have a question.
Yeah, go ahead.
Hey, Alex, what's the most common claim you see for landlords?
For landlords, like you're talking pre-COVID or as a result of COVID?
Sorry, pre and as a result of
COVID. Good. So I've mentioned, so the answer is flood or sewer backup, water damage losses. And again, if you're taking the time to review your current insurance policy, I cannot stress enough that you make sure you have good sewer backup coverage and you do include flood. The reality is 80% of the claims within the Canadian property and casualty right across Canada are water or flood-based related, to the point now where a lot of insurance companies are making that an exclusion to their policies because they're over exposed, right? So The answer was water-based claims, and claims as a result of COVID. I'm sorry, who's asking the question? I just want to.
Hey, my name is Amit.
Amit, okay, thank you, Amit. I've only had a couple of losses since COVID, the outbreak, and they're not really related. I think I mentioned earlier, one was a vandalism claim or a break-in, and it looks like it might have one tenant vandalism claim. So fortunately, that's good news. That's good news from what I'm seeing. But definitely make sure that you have proper water coverage in your policy.
And does that apply for, say, like a different dwelling type, like a condo unit?
Yeah, well, again, if it's an apartment style condo, the risk is a lot less. It's far less, you know. But what happens, where the exposure is in condominium buildings, if there's a burst pipe in a unit above you, or a pipe bursts in your unit and it trickles down below, right? So you want to make sure that you have that coverage if the unit above you leaks, or if it's your unit that lets go, because the third party liability portion of your policy would cover any damage to any other unit owner's unit. So you want to make sure you have third party, and every policy has third party liability. I've never seen one that doesn't.
Thanks a lot.
My pleasure. My pleasure.
Thanks for the question, Amit. Any other questions?
While we're on that, Alex, in regards to condo buildings, I'm not sure if you deal with it at all, but you know, a lot of even apartment building owners, the increases in their policy, they're not too happy with the increases they've seen over the past. And how do you think this long-term effect might be on individual condo owners, right? Because obviously that cost is going to get passed down via maintenance fees or what have you. So where do you see that going?
Great question, Creighton. So as far as I mean, I've learned a lot attending your events with respect to mortgages and the rates and things like that. With respect to insurance, we are in what's called the hard market, right? So essentially what that means in layman's terms is insurance companies don't want business, right? They're always crying that they're losing money. They always are. But and the insurance industry is cyclical. It's no different than any financial market, mortgages, whatever. It's cyclical. And we're in what's called the hard market. And quite simply put, Quentin, there's a lot of companies that are getting off risk. They're not making money in it, and they're getting off, right? The condo market, I know out in Western Canada, there is a brokerage out there that their condo, like a condo unit owner's policy is cheap. It's $365 a year. The reason being is the exposures are a lot less. Out west, due to the Fort Mac fires and whatnot, the underwriting or loss results as a result of that they've doubled the prices of condo insurance for one of the major brokerages out west. So I'm getting inundated with calls because their premium went from $300 up to $800, $750. So your question is, I don't see that getting any better. I truly don't. Solutions are getting tougher out there, and it's kind of a hard concept for a lot of investors to grasp, because they think that every insurance they think it's like car insurance, that every insurance company wants the business, and with respect to property and casualty for investments, that couldn't be further from the truth, right? It's getting harder to find competitive solutions out there depending on what type of strategy you're in. Does that help? I know it's not a happy answer.
Yeah, no, but that's what we need, reality.
But that's where we're at right now. And again, it'll come back. It's cyclical, right?
Yeah.
In the insurance, we call it a hard and a soft market. Hard being a hard to place business. Mm-hmm. And typically, historically, when you look at this trend, Quentin, it's a 3 to 4 to 5 year trend before we get back into a soft market.
Okay.
Alex, in reference to costs, I had a client of mine call me, and he says, based on, you know, what's happening, and he's not sure if he's going to get paid and such for May.
Right.
The guys didn't get paid. He didn't get paid for a couple of things on April. But he said he called up his insurance company, and he stripped everything out of it. He rose all of his deductibles.
Yeah.
He stripped out pretty much everything. You know,
Yeah.
he says he dropped his insurance, you know, slightly. I mean, it's not really ideal,
Yep.
but I suppose if this goes, you know, for an extended period of time, I mean, you know, is that something that some people might consider?
Well, like anything, you know, you have to be creative. You have to be flexible. People that have worked with me, and I've been fortunate enough to work with you guys over the last 4 or 5 years, you know, I'm always going on about coverage, probably more so than most brokers or whatnot. So I don't think it's ever a good thing when you, hey, at the end of the day, Christopher, it's all about pro forma, right? It's about positive cash flow, and that's, you know, that's what drives a lot of deals, right? If it's not going to cash flow positively, then you walk away from it. I don't advocate. It all depends, and again, it all depends on the insurance company you're working with, right? So if that's the only way that you're going to be able to save money and remain positive, that's not a good thing. The good news is there are, as I mentioned, it's a hard market, but there are still companies and offerings out there that are very competitively priced for the right coverage.
Yeah, that makes sense.
All right, cool. All right, Alex, I got a question here from Juan. So when you have a chance, have a question of aluminum wiring in condos.
Yep.
Yeah, I'm here. I'm here.
Okay.
Do you hear me?
Yep, go ahead.
Yep.
Awesome.
I can, Juan, yeah.
Awesome. So I'm right now, I'm a mortgage agent. I'm dealing with a customer that just bought a condo, and then we waived financing condition and did inspection, and lo and behold, there's aluminum wiring, right? And I'm helping him get the insurance in place, like his property insurance. And the question, in terms of it specifically, the question is the aluminum wiring covered by the condo insurance, or has to be covered by his policy?
Yeah. So I can talk about the insurance policy first. So this condo, by the sounds of it, if there's aluminum wiring in it, then it must have been built in the 1970s, because that's typically where you see that, right? Especially on detached properties. So the insurance industry's position with respect to aluminum is a lot of insurance companies just will not accept it. They will not go on risk unless the client or the investor, your client, would spend the money to pigtail that aluminum wiring, right? And even so, some insurance companies still don't want to go on risk. But with respect to, is the condo board responsible for it or your client, that you really need to, the insurance industry is not going to make a decision based on that. That's more of a question for a lawyer, or to read through the condo board's actual coverage, right? So it's that, you know what, honestly, that's the first time I've ever heard of that in a condo. I hear of it all the time on a detached single family dwelling. Never heard of it on a condo. So to be honest with you, it's not up to the insurance industry to make that decision who has to pay for it. That's a fight with the condo board.
Okay, well, because there's a standing condo policy, right?
Yeah.
And then, of course, I start shopping around the policy, and of course, I get shut down saying no. But the reality is, I don't even know that he could actually do anything to the electrical work, because for all I know, the electrical work is responsible for the condo, and it should be covered.
Yeah, great point. And essentially, this is how it is from now, again, like anything, a lot of condo corporations charters are different. They're not all the same. So you have to, but what happens is my understanding it from an insurance perspective is everything from the drywall in is the responsibility of the unit owner. The condo board has a blanket insurance policy that covers everything from the drywall out, right? So that's where the distinction is. So based on what you're saying, or what you're telling me, is that it sounds like it's the responsibility of the condo board to actually redo the wiring, right? Because you would think it would be behind the drywall, right? Not in front of it, obviously. So that's my opinion on that. I've never come across something like that before.
Okay, well, we'll find out. Closing is next week, so I just hope it doesn't pop out.
Yeah, exactly.
Hey, Alex, you're a good-looking guy, but I'm having a hard time seeing you. I'm only seeing your eyeballs right now.
Is that right? Oh, sorry.
There you go.
That's the thing is, too, I've got the isolated hair going right now. I haven't had a cut in 8 weeks, so I definitely have to go with a ball cap right now.
No, you haven't tried doing it yourself yet?
Janelle's dying to try it, actually, but I'm not letting her near it. No way.
No, I've done it once. Yeah, I was getting into the 70s afro there, so I was like, I got to clean this bad boy up.
You know what? You would rock that. I'd love to see that, Gary. That'd be cool.
I don't know. All right. Any other questions? I think Janelle's got a question.
Hi there.
Hey, Janelle.
Hi, Janelle.
Hi, Alex. Hi, Gary.
Hey, how are you?
Hi there, to Alex as well too. We just
Yes.
spoke over the phone. I don't know if you still remember me, but I have 2 properties with you that are insured.
I
have a
do. I certainly do.
Oh yeah, we spoke a couple of times.
Yep.
So I just have a question: why you stop insuring principal property right now?
Yeah, so principal residents are what's considered personal lines insurance, right? So I'm a commercial insurance broker. I don't have any access to solutions or relationships with personal lines carriers. That being said, what I've always done, Janelle, is the firm that I work for, we have personal lines brokers, right? So it happens quite often. So one of my commercial clients would like a quote on their car or the principal residence, I would refer, and right now I'm referring all my clients to a colleague of mine by the name of Allison Colangelo. She's our best personal lines broker. So I'd be happy to refer you. Now, I'm trying to remember when we last connected about the personal line stuff. I can't recall that.
Last August, last year.
Last August? Okay.
Yeah.
So if you like, just send me an email. And the easiest way to do this, Janelle, is you just send me an email. And I will just flip it over to Allison, and she can give you a quote from there.
Okay, great. Thank you.
Okay.
Alex.
Yeah.
Juan again. Along the same lines as Janelle, I manage several properties, and some of them are me and my wife, and I have one with my daughter. And it's a pain to manage one policy for each thing plus my personal residence. So my question to you is, is it possible to kind of commingle everything, all the policies into one, like all the properties into one policy, at least everything that's under my name?
Yeah. So the answer to that, and I see that a lot when I'm reviewing portfolios for the first time. The answer to the question is it's never, ever, ever a good idea to have multiple properties on one policy. And the reason that is because there's an issue with respect to the liability limit. So it's called non-stacking of limits. So I see that often when I review policies. You always want to have each individual property on its own policy. Now, a lot of people think, well, the more I stack on one policy, the more money I'm going to save. That's not necessarily true. What I do, in my program, I have multi-property discounts. So the more individual policies you have, the greater the discounts are. So you end up saving money, but from a liability or a risk perspective, you do not want to have just one liability limit on one policy covering multiple properties. Because if you were to get sued, if there were slip and falls on 2 of your properties, you're going to exhaust those liability limits. So it's definitely adding risk, okay? And I think the part B to the question is, there are some companies out there that the principal or core business is personal lines, car, and house. They will do an investment property. They have the ability to write it, but they don't really understand it. And how they're selling, it's almost like a sales tool. Is they'll say, well, you'll get a 10% off your investment property if you bring your car and your house to us, right? Investment insurance is all, for all intents and purposes, business insurance. You're insuring your business, your portfolio. You want to carve and keep. You don't. And if a tenant or someone was going to sue you all right, from your investment property. You don't want them to have access to your principal residence. So I always tell people, keep it at arm's length and keep them completely separate.
Awesome. Awesome. Good point.
Okay.
Perfect. Thank you.
Oh,
All
my
right.
pleasure. My pleasure.
Yeah. Alex, listen, thank you very much for your time this evening. Thank you for sharing your experience and your knowledge. It's been great. I hope everybody that's on the call has gotten some good information out of this. I know I definitely have. Any last words of advice before we kind of just wrap things up, just in regards to what we can expect kind of moving forward? Or one of the things that you touched on, I think, was really important in regards to potentially there may be some insurance relief coming down the pipelines. How would they get tapped into that information?
Yeah, absolutely, Gary. And first of all, I just want to give congratulations to your team there, right? I get the emails every day. I'm on the mailing list, and you guys have done a great job of getting out there and providing information, right? Because this is brand new to everyone, and your podcast, things like that. So that's a valuable resource, and you guys are really doing your job. What I would say was, right now I can't say for sure, but the commitment I will make is you and I keep in touch a lot, and same with Quentin and the same with Christopher. So when I hear of an official change, I'm going to reach out to you guys and let you know, and be happy to quickly jump on a podcast for 5 minutes and provide updates. But right now, it's business as usual. I'm sad to say, with respect to the insurance industry, they haven't made any concessions yet. So I just implore everyone to just, keep positive, and we will get through this sooner or later.
Okay, sounds good. And if somebody wants to get a hold of you, they don't have your contact information, how can they reach out to you?
So if you want to go on, I can quickly give it over the phone here, but if you just go on mycor.com, you'll see my information there. I'm on LinkedIn quite a bit, but real quickly, for anyone that is still on, so always feel free to call my cell phone number. That's always I don't really use a desk line unless I'm making an outgoing call. So my cell phone number is 289-237-6829. Again, that's 289-237-6829. And my email address is abell, BELL, at MyCor, MYCOR, insurance.com.
All right. Thanks for sharing that, Alex. And you know what? Before we wrap it up, I think we'll ask just one more question. Alan's got a question just in regards to umbrella and blanket coverage over multiple investment properties. Just want to touch on that, and then we'll kind of just wrap it up. And
sure.
We can get to drinking our wines and beers.
You know what? You got it. Exactly. I'm getting the NFL draft on. And,
I'm getting tired of drinking this water.
Does that question come from, is that Alan Grace asking the question?
Yeah, exactly.
Hello, Alan. How are you, buddy? Hey, pal. Again, the umbrella solution, it definitely is a solution. And that would kind of go back to, I believe it was Juan that was asking, right? So for people, when you get to a certain point, your portfolio or the number of doors gets to a certain point, your risk changes, right? The more money you have, the more capital, the more, the potentially you are to actually be sued. So there is a commercial insurance solution called an umbrella policy, and it deals specifically with the liability exposure. My recommendation, Gary, is that when you and Alan, I think Alan and I have discussed this in the past. So it typically, price-wise, it makes sense when you get to past 5, closer to 10 properties, all right, whatever strategy or exposure they are, then it's cost effective to look at buying a blanket umbrella policy to cover each individual property.
Does that, but isn't that increases it though, right? So as opposed to just having $1 million per property, you're now maybe potentially getting $2 million across any of those properties that may potentially be impacted, just to clarify that, right?
Yeah, and to clarify,
Okay.
you should never have just $1 million on your underlying limit in your policy. It should always be 2, Gary. Always be 2, bare bones minimum.
Yeah.
It used to be $1 million years ago, but now the minimum should be 2. And yes, it does increase. So what you do is on each individual underlying liability limit, you're paying for $2 million, and then you buy one blanket of $5 million or $10 million, whatever. It all depends on the size of your portfolio, and that all your properties come under that. So in essence, you would have 2 plus 5, so you would have $7 million on each property.
Okay. Good to know. Alex, thank you very much for your time. Thank you very much for your knowledge. I really appreciate it.
My pleasure.
And everybody that's on the call, enjoy the rest of your evening. Go grab a glass of wine. Go grab your favorite beer, and we'll talk to you guys next Thursday. We have my good friend Matthew Frederick, so he's going to be on here talking about how to organize and structure and grow your business. All right, so enjoy your evening, and we'll talk to you guys next Thursday, 8 p.m. Thanks, guys.
Thanks, Gary.
All right.
Thanks,
Thanks,
Gary.
Alex.
Thanks,
Thanks, Alex.
Stay safe, everyone.